All right, so welcome everybody. I think we are again looking at one of the very key topic today in our weekly discussion. The main thing I think a lot of people have been asking this question about, is it the right time to buy? Is it like, what is going to happen on this April 2nd deadline with the tariff? I think even before the early part of this call, as we started, we had these comments. So let me get going on that. And first of all, let's have a quick look at the markets as we usually do. So I will share my screen and we can start discussing where we are, first of all, in terms of the market cycle. Um, so as we have been talking about, this correction, mostly what we are seeing right now is we are still consolidating, even though it looks like we have kind of seen kind of bottoming out process. If you see the volumes were high, we saw some kind of, buying coming in tech stocks, which are leading. Some of them are leading already. If you've seen some of the stocks like Nvidia or Apple or Meta and all, they have kind of seen reasonable bounce. But I think overall, as we discussed, the sentiment is still pretty bad. And everybody is talking about this tariff. So we are definitely a kind of, after a steep fall, we are below 200-day moving average on S&P 500 or NASDAQ or all, like most of these parameters are showing some kind of a deeper correction than what we are used to. So I think today's agenda right now is to discuss, first of all, how to make a plan. Like, what do you think is the right thing to do? And personally, because I keep getting these messages one-to-one also, that is it already time to buy or it is not? As you know that if you are part of the All Access subscription, we have given a few buy alerts recently. So let me go through the process of how we make it happen. So one thing I want to revise from what we discussed last week is that good days happen in bad markets. Like 50% of the best days of the market or during the bad markets, which is like we can define current market as bad markets. As we have seen, we call it as a correction, or there are many different terms used. And also this analysis, which we discussed last time, that if you miss out on those bad days in long-term investments, you will make 50 up to 54% less returns if you try to exit and try to buy and at a low and you miss out on those days. So I think having said that, this is, by the way, this is what was the headline from Wall Street Journal last week. Last Friday, March 14th, was actually the best day. So it also proves the thesis, right? It was the best day of 2025, which happened after the drop. So we established last week that you cannot wait it out, or you cannot always time the market that, oh, market is bad right now, I should sit out. So that is, we have discussed multiple times, and as we have established, that's a problem. So I think our goal right now is to focus on what would happen, first of all, on April 2nd and how to build a thesis. We have to still ask the same question: has anything fundamentally changed? When we look at these tariffs, market usually prices in the worst case when it was announced. And that's why we have been falling since February. And we had a much deeper fall in early March when it was further confirmed that originally market was expecting that March will be a time when they will be reversed and some kind of negotiation will be achieved. That deadline was moved to April 2nd with the reconfirmation that we will still see reciprocal tariff. And Trump added one more thing, which is he will also include all kind of value-added taxes or any other indirect tariffs into the mix when considering reciprocal tariff. That really broke the markets. So having said that, we saw that the initial reaction is usually for the market is to take the worst case into picture. And since then, we have been actually bouncing back. We already discussed that we had one of the best days of 2025 already last week, last Friday. And today, as we were discussing earlier in the WhatsApp channel also, that we had one of the biggest expiry like of this quarter, where most of these heavily shorted puts and futures and options, all those were actually expiring today. So that did not result into any major negative action. In fact, we saw both S&P 500 and Nasdaq closing in positive, barely, but we did not drop, which is a great sign that even though all those leverage positions are unraveling, we are still seeing that market is kind of finding a bottom. So from that perspective, we are seeing that money flow is no longer negative. We are seeing that, in fact, we have seen this chart where we say there is a record rotation out of US stocks, which is basically, if you compare where we were in December 2024 after election euphoria, we were like, we are seeing this overweight US equities at a record number that actually reversed already in March. And when we had similar situations previously, like when we go from, going from overbought to kind of underweight US securities, from that place, we have seen very big rallies, like, up to like this last time from March 2023 to December, even though it took a long time, it was a 60% move up, which is also creates that usually it's a sign that when we are underweight stocks, usually there is a pessimism in the market and we can see a good recovery from there. Um, in addition, I think we are talking about the inflation being one of the biggest concern being cited as a reason for tariffs to cause inflation, which can create problem. And I was looking at this inflation, which is last 1 year numbers, and we are at one of the lowest numbers right now. So we do understand that tariffs have not come into effect, but the rest of the factors, which are actually bigger component of tariff, like whether it is shelter, whether it's energy, all of those things are already contributing heavily towards tariff coming down. And if you look at the goods part of the things which are going to be impacted by tariff, the worst case analysis points to hardly 1% increase in tariff. And you remember that we have already seen almost 10 to 11% tariff. We have taken into stride. We have actually been going through one of the biggest bull market, even after kind of 10% kind of tariffs. So what when I say inflation, sorry. So when I say tariffs, worst case scenario is assuming 1% inflation addition. Market has already taken the worst case. It's probably forming a bottom. So in my looking at all these indicators, it might be one of the best opportunities to buy right now, or probably it has already passed, as we discussed, right? Means we have talked in last 2 weeks. Last week we specifically talked about bottoming out process. Now, whether it's a short sign, no, of course, no, because as we have discussed previously, and we were looking at technical indicators, I think 2 weeks back, that we are still below 200-day moving average. So technically, we are still weak. All the signs are pointing to that it's a great time to buy. But what is historically the case, right? Means we have cases where we have gone down 200-day moving average, come back multiple times after spending a few days. So it's not something which is unheard of that it's not an absolute line. The second part is that we have sometimes, like in 2022, when the macro was really bad, when we just saw that we had the inflation in double digits, 9 or 10%. At that time, we actually continued and we had a pretty big correction. So what we need to answer is whether this is as bad a situation fundamentally like we had in 2022 with inflation, or so that we will continue this correction, or we are seeing this as a short-term correction, which is going to reverse very fast. So I think macro is not suggesting that either inflation. If you look at the 10-year yield, which is not rising, that means we have multiple times talked about bond market being the real money, like the biggest money allocation comes from bond market. And they are not signaling that inflation is a big concern, even with tariff. Because if inflation was a concern, the yield should be going up. We are seeing a pretty stable situation with the yields. So, and we are seeing underweight US equity. We are seeing some of the worst pessimistic conditions. So all these are giving a signal that we are probably sitting at a pretty good buying opportunity. And if, let's say, we still have more uncertainty, means what are the negatives? The negatives are probably when April 2 will come and there will be some further news and noise around, or we are going to delay or we are going to renegotiate. And the uncertainty might continue for some more time, even though most of the Trump administration people have talked about that they will resolve this time. But as we discussed, there will be noise. So there might be more volatility, but now we are talking about, do you really want to sit out or do you want to invest at this time? It's all a matter of finding the odds, and the odds are currently driven, in favor of investing. And one thing also I want to talk about is because a lot of people, again, when I talk to one-on-one, a lot of people are talking about, the fear factor. Remember that human psychology works very much with this loss aversion principles. We are looking at, there is a famous story which I think everybody says, right? That if you find a $100 bill on the floor, or if you actually lose $100 from your wallet, feeling of pain you feel when you lose $100 wallet from your wallet versus the joy you feel if you find $100 on the floor, they are not comparable. Like you feel much more pain when you lose money, and you feel little joy in finding money easily. So I think this is where this very much is applicable in investment world. Probably today you might be feeling that, oh, there is a potential loss in front of you because of uncertainty, and you do not want to invest, or you do not want to be in the market. And that is where I think that's where the opportunity lies. That's where we say that you are in the market because you are taking risks. Like, you're otherwise you will be just not investing. You will probably be sitting in cash, or some kind of fixed income rate market. If you are in the stock market, you're already there to take risks. You are not there to not be taking risks. And if you are taking risks, the odds are better today after the correction, when the market is down, when market is underweight equity, when there is pessimism. So that is, I would say, an opportunity in our view, and one should take action. The means again, feel free to raise hands or put your comments in the question if you have any. But I think one more thing I would like to say is, yes, there is uncertainty. Yes, the things can drag on. What we recommend, I think, and what I have been talking very much about is, if you feel that you're not comfortable, there are other tools. Rather than sitting out of the market, we usually recommend using something like options, where you can actually take, like I always talk about options being an insurance to the market, where you can get discounts while buying stocks by selling puts or by selling covered calls. There are a lot of ways you can reduce risks in the market if for the short term uncertainty. And remember, when the uncertainty is higher, usually the option premiums are higher, because and that means you're able to reduce your risks even further. So that is what we always and we have been doing, and I think many of the people who are part of our Proflex All Access subscription also, you also know, right? Means we have seen our trades, we have discussed. I think we did a couple of calls, even in our investor day, we discussed a little bit about how to use these tools. I think that is where, means I would like to discuss, if you have any, like how people are thinking about it. But so rather than sitting out of the market, this might be one of the best opportunity of this year to invest. You should use the tools around, using options, using other tools to contain your risk if you are considering this as a kind of a risky period to invest. But you cannot be sitting out of this market at this point. That would be my summary. So again, let's continue the discussion. We have, you can ask your questions or make a comment. But basically, looking back at the market situation from tariff perspective, I would call that as a more of a good timing before and to buy. And let me tell you one more thing. As we come closer to the date, we are seeing, like, usually there is a saying on the Wall Street that, buy the rumor, sell the news. Similarly, in this case, because it's a negative news, people are selling the rumor and probably going to buy the news as it happens. And that can also further happen, like near the April 2, we might see stocks already recovering before that, because by that time, the date is already there and market might be expecting a resolution. Second thing is we are seeing from EU and from many other countries who are willing to delay their own. Means original stance was that, oh, we are going to put reciprocal tariffs, or we are going to put tariffs on US goods, and now they are delaying that as well, and they are on the negotiation table. So there is higher chance of getting a good news now in terms of negotiations, in terms of settlements and trade deals being announced, than anything worse, because already market has priced in the worst case scenario. So that is another factor to consider when you are looking at investing at this time. So that is one of the takes I would like to bring out here. So I think from that perspective, we can now also look into the other factors. One more thing actually I wanted to share is the macro, while we are waiting for the questions or anybody else to make a comment, is the money supply. So from a macro perspective, by the way, this is taken from the Bitcoin world, because in Bitcoin world, people track the M2 money supply a lot, because And this chart shows the correlation between Bitcoin and money supply. And by the way, there's a lag usually. They usually use a 3-month or 2-month lead time between the M2 money supply and Bitcoin. But let's ignore that for now from a Bitcoin perspective. But even generally for macro, for all risk assets, we need to understand that the money supply since January is going up. It's not just US, but we are talking about China stimulus, where they have increased their deficit target. And we have seen, even US, I think we have seen a lot of liquidity coming into the market, and with the yields coming down and so on. And now what we are looking at is even EU is talking about increasing defense spending and so on, which will have some impact on the overall global money supply. So this is one more thing I wanted to say, that while we are looking at lower inflation number, increasing money supply, uh, underweight equity, all this macro picture is giving us a sign that we are ready to, uh, you know, this market is probably at a very good place to invest. So I see a question in the chat, what if we are not at the bottom? So I think, as we discussed, right, means there is never anybody who is trying to invest. You will never be able to time the market. Like, nobody can claim that we know the market. It's about odds. It's about improving your odds of making returns in long run. And if that is the case, you are not looking to make, absolute entry at the bottom. So how do we do that? And as I discussed before, the options are a great tool. You can enter with the using, at your own price. Means that's what I really believe in. We have talked a lot about it previously. Also, we do this all the time in our Proflex recommendations and so on. Basic idea here is use options to cover your risks. You can do it either enter your, you can sell put, you can have covered calls. You can do a lot of those strategies to to ensure against this fall. And I'll give you one example. I think we did a trade as soon as the market fell. We were a little early. Like, I always believe in buying the dip unless the macro changes, and macro did not change at all. I do not see tariff as that. So one of the recommendation we gave was QQQ, for example, which is a great way to trade the Nasdaq. Um, we sold at 480 put. At that time, we were at above 480 on QQQ. And we were able to roll it within a month, within like 2 weeks actually, to much lower break-even point and collect more premium. So even while market was going against us, we were able to roll it and take benefit of this options to control not being able to find the absolute bottom. So there are a lot of other similar, I would say, scenarios we can discuss. I think this call may not be sufficient for that, but basic idea here is that you should do these, kind of additional tools everybody should learn to reduce risk. And as I always say, options are insurance in the market. If you to be able to time the market, or let's say of course you cannot time the market, but what you can do is you can pick your price. You can say, I want to buy this stock at this price. I'm comfortable buying this stock at this price. And that's very useful if you understand options and if you're able to define your break-even points around that. Then I see another question is, what do you mean by roll? Okay, so the rolling is mainly, we are talking about, you have an option which is expiring. There is a time premium, which as you go closer to the expiry day of the option, you are basically selling a more time duration option and picking up premium from the market. In that process, you end up reducing your break-even point. So that's how we use rolling. But idea here is to keep increasing the time if you want to pick up a lower break-even point. In this process, sometimes we are also able to reduce the strike price, and that's how we are able to get even a lower and lower break-even points. I see some other direct message questions. It says, is tariff same as import duty? Yes, I think tariffs overall are the what you pay when you are importing things. So yes, it's same as import duty, and they are basically when you're getting goods, the physical goods which are coming across two countries. That's how they um, are applied to the goods. All right. So these are, I think, coming back to this. whole point about how do you think about investing, and I think how do you think about this April 2 deadline, my question would be same, right? If you are looking to invest there into certain stocks, like for example, tech stocks are already bottoming out. We are already seeing. We tried to answer this in last 2 weeks, and I think we have been talking about this, that how none of these things, tariffs, have a direct impact on some of these, whether it's a AI trade. I mean, there's hardly any impact on that. With a semiconductor being the leading sector, do you really expect US to put tariffs on semiconductor? Means this is US is there is a stated policy from even Trump or anybody, right? Means they were talking about being the AI capital, being the technology capital of the world, which US is leading already. Means you cannot slow that down by putting that. So there will always be some negotiation. They're announcing these deals with TSMC to come and put up fabs here. So what I'm trying to highlight here is that what changes with tariff is very little. What means, even when we talk about like Walmart, which is very heavily impacted by importing goods from China, there was this news story where China actually held a meeting with the Walmart executives, the Chinese government, where they talked about how to absorb these tariffs in by either taking some their own Chinese producers will take some of the hit, and how Walmart will absorb some, so that the end consumer does not see huge increase and the consumption does not go down. So we are already seeing people reacting. So the whole narrative around tariffs will create a huge inflation and so on, people do not understand that this may not even take impact in the same manner, the way the worst case scenario is being analyzed. And I think one more thing which I would like to highlight is that how right now tariffs is seen or inflation is seen. It's more about that the goods inflation, as we discussed, is less than 1%. But the main thing is the money supply increasing has a higher impact on inflation than this is what we saw during the early times in after COVID and so on. And at that time, the supply chain were the issues. Right now, we are in a lower energy prices and lower shelter prices and all, which are the bigger components. So I think even if tariffs impact that, we should not have major issue on the macro picture. So I think we have one more comment here, which says that we have a report that says that market is being supported by strong retail inflows, um, which are in line with previous years. Um, so I think retail inflow, yes, has been strong, but that also ties with another. If you look at the data, there was a lot of data which came in last 2 years in this whole rally, that a lot of retail was sitting on the sidelines. So, and I don't think tax refunds are that huge that can trigger. It has never been considered a big source of investment money, or I think the money on the sideline. Usually, I think it's a reverse. The tax season usually creates in the high net worth individuals who are the main investors in retail. Those actually end up paying some taxes in this month, and usually we see tax selling in March and April. So I would not say that that can subside, or that should be a big factor. That if the March returns and uh, tax refunds are causing it, I mean, there is no sign for that. Um, so I think this is where what I would like to say is mainly inflows. What matters are, like, we are, what we will see as the today's expiry after multi-trillion dollar of expiry, which was, I think, one of the biggest overhang on the market. We also, I think we did not talk about FOMC also, because we had a huge news, I think, which got missed out in all the noise, is that we are almost at the end of QT. We are now no longer in the QT cycle. We had already reduced it last year by half, and now we are almost down from the rest of the 25 billion to 5 billion per month. So that gives a huge boost in liquidity, where the Fed balance sheet is not reducing anymore. So that balances out some of the other negative effects. So I think overall, from a macro perspective, we are looking at improving situation right now. And retail, I think, is of course, it's very difficult to predict. I think there is not a science on how retail comes in and comes out of the stocks. But I would say that there is no, just to conclude on that question, I don't see that tax refunds being the primary driver. We have a question on Bitcoin. Bitcoin hasn't recovered much in spite of US government announcement of crypto reserve. I would say there are two factors. I think it's a good question because this was a huge announcement, but I think overall the way they did it is, I think the whole Trump tweeting about, starting with some random altcoins and then going into, then adding that the whole 1 week before the actual signing of that executive order, that really created a pretty bad impression on the crypto communities because people did not like it. Of course, when actually the executive order came, that was in line with what was expected. So I would still call that as a great positive news for Bitcoin, where it was signed as a strategic reserve. So there were two disappointments there. One was that they said that they will not sell. That was the only executive order signed, while the market was expecting that they will be buying from US government. By the way, that bill is still there in Congress. That bill is still being pushed, but I don't think that has a good chance. I mean, it's very difficult to justify using tax revenue dollars to buy Bitcoin. And there's no prior, I would say, um, kind of precedence of any kind of investments happening by US government into these things. But anyway, the point is, okay, so how do we see it? So I think it's definitely positive. There have been a lot of discussion around, they call it as a tax neutral or dollar, like, where there's no impact to the taxpayer, where they're not using taxpayer money. They can generate, new Bitcoin reserves. That is definitely going to, in future, now that the bill is there is a strategy reserve is announced, this is going to be positive in long run. In short term, I think we need to understand that we are still, like, even though US equity market and most of the risk assets, they have lost all the election returns. Like elections, when the whole euphoria started with Trump winning the election, we have lost all of them. While Bitcoin is actually doing way better, because if you see, we were in around $60,000 to $70,000, and right now, even after the correction, Bitcoin is around 84. So I would say, with all the news flow, with all the uncertainty, uh, liquidations, we are still seeing Bitcoin outperforming the stock market. So, but I think that from a strategic reserve perspective, nothing new came out for the market in terms of money flow. And third, I would say, is we did discuss a little bit around the ETF, the Bitcoin ETF outflows, which started at the same time when the equity market outflow started. So if you see, so it looks like Bitcoin ETFs which were a quick positive for the Bitcoin. Now they are becoming negative because now the correlation is increasing with stock market in short term, because the same people who are dumping US equity, they have a portion of that invested into Bitcoin ETF, and that is creating a negative dollar flow impact. So I think my summary on Bitcoin price movement would be that it is doing better than equity. If you see a little longer time frame, it is finding a good base. It is still holding close to its 200 moving average, while S&P 500 and Nasdaq have dropped way below 200 moving average. And third is that as the equity inflow start, and we have seen already in last 2 days that the inflows in Bitcoin ETF have improved. So if equity inflows continue and the Bitcoin ETF inflow continues, we will see price improving faster in Bitcoin. So that is my take on where we are on Bitcoin recovery. Yes, I think it is. It was a euphoria cycle when we were all-time high on S&P 500 and Bitcoin. Just I would say 6 weeks back or 8 weeks back, and I think we are probably in that correction phase where all risk assets are taking a backseat right now. All right, so let's see. There are any other hands or any other questions? I see another one on the chat. It says there is a line of thinking that the crypto is 3x beta of Nasdaq. So instead of investing in crypto, one could as well invest in QQQ. Um, I would not necessarily agree on that, because in very short term, yes, if you're trying to do 1 or 2 day trading, this kind of correlation might exist. But in a medium to long term, we have seen that Bitcoin has been very much uncorrelated with any of these assets, and that is another reason I would say we have means we have talked about it previously, but I would say you can look into a little more. And one example, as I gave you, right, means if you just look from November, from election time to now, this theory will not work because the Nasdaq and QQQ have actually been way worse than what Bitcoin has delivered, even from election time frame. But yes, I think overall, you can play this correlation in a very short term, and that is what is playing out right now as we are seeing these equity outflows and so on. So, no, but I would say and what we are very clear about is that people are allocating into Bitcoin. BlackRock is promoting it as a uncorrelated investment, and I would try not to say something, which means even though at an institutional level, if they're able to sell it as an uncorrelated asset, I think these are fair statements that I don't think this will continue as correlated in terms of um, medium to longer term. Like even gold is like, has been in a great bull run. We have been talking about it earlier. And there is a lot more kind of theory around, why hard assets like, gold and Bitcoin and so on will probably have a better like an inflation hedge in current environment. So we can discuss all these, but I think it's mostly around how do we use this right now as a negative sentiment as an opportunity. I think that's what, if you look at all these are considered as a risk asset right now. So the sentiment is negative for all of them. So we are probably seeing worst kind of, we can say a money flow impact, which is causing this kind of correction right now. Yeah, please go ahead. I have a hand here, but I don't think it's available. So, okay, let me keep going. Are there any other question? I think we can, right now, you are able to unmute yourself. I think we have made the call open to discuss if you have any other comments, or you can still continue to put your question in the chat. Yes, I do see a question here. So what are some of the good strategies to learn with regard to options? Is it high bar to learn? No, I think we have been, to be frank, I've shared a few sessions with a lot of people, like, when asked in terms of how we can build these strategies. If you are, I think you're already seeing these things, and if you are our subscribers in Proflex, so you are seeing those things. But I think it's a matter of just spending time on doing, how do you actually build strategies? There are a lot of nuances, of course. I cannot say that it's easy to get started. Like, well, you have to do it yourself to really do it, to make a good strategy around it. We can definitely discuss that. Again, it will be very difficult to do it over this call. It would be ideal if we do some kind of a in-person discussion, or whiteboarding is the best way, I think, to get that. I think I did share a few YouTube. We can put that in the WhatsApp also. But I think overall, what we can do is we can share again. I would say, like, our team to put up some well-known videos which we like on options, and we can go from there. But as I said, I think having a session on that is a great idea. I think let's do that. But as I said, it's a better thing um, when we do some kind of a whiteboarding to define scenarios. Means I can one action I can take is we can share some of our trades which we did in recent times. But I think the best learning happens when you do live, like when you actually take a trade or two. I would heavily recommend everybody to, you know, start learning very basics and use it as insurance. Like, again, as I said, never speculate. Means I know that the stories around options are pretty negative usually for people but I think I have personally used it. We have used it with institutional strategies. We have built strategies for them. We have done it under, for high net worth individuals, and doing it as advisory service. We have done a lot of things using options successfully. The goal here is that you are how you are using it. Means options were originally defined, futures and options segment was defined as a financial instrument to hedge against price moves. It was never a speculatory tool. It was a hedging tool. If you use it in that way, there is a lot of opportunity to reduce your entry points, reduce your, increase your profits. So that is what I recommend. As long as you are using it in the right way, they are one of the best tools as a retail investor. I understand the issues here because remember that every option you buy is 100 stocks. So um, I'm assuming your portfolio sizes are big enough to do that. Like if you're doing a 10 or 5 stock of NVIDIA, I'm sorry, means that won't work. Means option strategies won't work because you need to commit at least one lot, which is 100 stocks of NVIDIA or Tesla, which is not a very small money, but I think that's where the difference is. The second part, which I would like to say, is that options means are, even though the strategies are not very complicated. Like if you say, or you think that big funds or big hedge funds or institutional investors, means when I have means done in, or like on those capacities, and I've talked to them and I've worked with them in terms of managing some part of the portfolio consultancy and so on. Let me tell you one very simple thing: the biggest issues are never the strategy. Means what we can do as retail investors at a one lot, two lot level, or five lot level. They do exactly same strategy, but their issues are very different. Their issues are size of the movement. I mean, they need to, for their portfolio sizes, they need to move 1,000 lot, which is or 2,000 lots or 10,000 lots, and liquidity is not there. So what I always talk about is, as a retail investor, as a small investor, you have actually better capability to make higher returns using these tools versus even the institutional investors, because you are agile, you can make moves, you can roll your options, you can sell or buy the one position quickly, while you cannot really do that if you're a big fund. So this is one thing which I always talk about. Everybody should, as a retail investor, if your portfolio size is anywhere north of 200, 300K, you should learn about options, and you should get them into your trading methodology, because that kind of returns you can generate with them will be much, much, much higher. Um, okay, I think we're moving on towards NVIDIA specific questions. So, any update from NVIDIA GTC on NVIDIA stock? I would say GTC usually is very forward looking. Of course, they had some really great products. Like they did update some of their new, hardware. Like they have a new Blackwell. They have a new chip for creating. Even for robotics, they have created a pretty decent, solution. They even came out with new platform for developing your own physical AI, they call it, and basically it's a development platform for how you build solutions around uh, your own robotics and so on. They announced partnership with GM for self-driving cars. So I think there are a lot of positive news, but as it happens, right, these are all forward-looking statements. These are all not yet impacting revenue. And if you believe in the future of AI, if you believe in growth, I would say this is always, there is no question about NVIDIA's dominance. There is no, and GTC re-emphasize that. I think what market is living in right now is a kind of a fear of that we have that we don't have that spending left. We have, probably it's a macro issue market is thinking about, and that is where we have seen this problem, like where people are saying that whether the growth prospects have disappeared, whether they can maintain these margins, and that I think is not going to be answered by GTC. That's going to be answered by how the next quarter pans out, how markets start seeing better scenario. So I would say it is more about that right now on NVIDIA. Because if you look at, and I think we did talk about it on the 2 weeks ago, uh, at this current prices, if you look at the forward PE of a growth company which is growing at such a high rate, um, is it doesn't make sense to have such a low forward PE. But on the other hand, people are saying, is this growth even relevant? Like even if they launch products, even if they launch new Blackwell or whatever, is there enough market for it? So that question, I don't think is answered. And that cannot be answered by NVIDIA. That has to be answered by the market and the rest of the industry. Yeah,
Yeah,
please
thanks.
go ahead.
Raman, can you hear me?
Yes, I can hear you.
So question. We just stopped it, 20
Yeah, I
minutes
don't think we can hear you. Maybe we can get you on a better line. And then
in cloud.
your voice is breaking. You can put it in the chat if you're not audible right now.
The announcement that was made on the. You can hear me? You can't hear me, Aman? To hear me?
No, I don't think it's breaking. So I think it would be better if you can put it on the chat.
Okay.
Thank you. All right. So I think, as I said, so we are mostly done with the agenda. I would love to hear the comments. So as I said, you can unmute, you can talk, or you can put your question in the chat or your comment. But basically, I think for today's agenda, just going back to the whole tariff thing, like all the pointers are telling us that right now, probably we are at the worst case sentiment, and this might be a good time to consider, like, that is it time when you should be, looking at buying or adding to your position rather than worrying about it. That would be my take on it. Yes, please go ahead.
So given the changes in if you look at, I don't know if you're looking at 90-day correlations for Bitcoin to, let's say, S&P, or like the rolling 90-day, or I don't know, rolling 30-day. Like, how are institutional investors, it's now been trading since, like, let's say 2010. So but not with much volume until recent. So how are they looking at, it's such an early stage asset, that how are they evaluating, what's their mental models for how to even think about the changing correlations from one year to the next? And
Sure. No, I think I would say I can maybe share later on or in the WhatsApp or later some other places of how they are analyzing. Like, again, I'm not going to be answering the same way as BlackRock does or Coinbase. So Coinbase and BlackRock had done a study and they had published some of this data of how they do it. But basically, from a mental model perspective, it's very simple. You look at at the asset in even just last 5 years, forget about 2010 or so on, right? Means at a yearly level, the annualized rate of return of Bitcoin has beaten all other asset classes over last 5, 7, 8 years or 10 years. So it doesn't matter. Means you cannot call it correlation if you are so high or up, right? And secondly, as we also discussed, even from November to now, means we have already seen that Bitcoin is at a much higher level where it was pre-November, pre-election. So if you look at the critical timelines, you will see that equity and means or even gold or anything. Even in fact, gold is another example. At one point, people were thinking that gold and Bitcoin are similar and there will be a correlation. So I would say Bitcoin has shown some correlation with gold, some correlation with equity, but in general, there have been enough reports now, enough documentation now, that if you take it anything more than a few weeks or few months, it is very uncorrelated across any other asset class. So that would be my answer. But again, I don't think I have the data in front of me right now. I can share, I think Coinbase has published a very good report around, and which I think BlackRock is using in their institutional presentations also, which is around how they calculate the correlation and why they believe it is the least correlated asset to anything else. But as I said, it's about the what is not known is this impact of ETFs, because now we are talking about multi-billion dollar, like tens of billions of dollars now coming into Bitcoin ETF, and the ETFs are an equity product, and if that keeps on becoming dominant, would that become more correlated? Yes, in short term, because the money flow and the all the liquidations and the money flow does impact. But that has been true for gold also, right? Means gold ETFs exist in for last 24 years or so. So I think gold is still considered relatively uncorrelated. So I think in short term, yes, everything becomes correlated because of money flow. But in medium to long term, these assets have already proven that they are not correlated. I don't know if I answered that question, so let me know if anything else, if there was anything more to it.
yes, I think I couldn't find that Coinbase report, but yeah.
I will definitely share it on our WhatsApp
Okay.
group. So if we can continue with discussion there.
Okay.
All right. So I think you're able to unmute yourself now, and we can take comments. And also, as I said, just to remind that we are recording this to make it public available. So if you don't want to be disclose your identity, you can just ask the question indirectly. And also, put it in the comments.
Hey, should we do any some options type of training or something, like some class or something, or maybe next time
Yeah,
spend 10 minutes? I don't know.
means we can definitely do that. As I said, means it's a matter of, I love talking about options. Means that is one thing which I would say I personally use, like for last 20 years. I'm using options like as my primary tool to trade. Always available to discuss. But I think the question here is usually everybody comes at a different level. So I would recommend everybody to come with a specific trades, because I'm not a, there's enough YouTubes available, enough basic material available. So if people already know what is call puts and, basic spreads, we can, if we come with that base knowledge, we can probably do a session, as I said, it works best in a in-person whiteboard kind of whiteboarding where works best, where we can talk about scenarios. But we can try it either way. So always available to discuss that. What do you have in mind in general? Like, are you thinking of something like,
I don't
specific
know.
trade
Seems like
specific? Are we talking about like,
I'm missing out on basically the problem right now is I don't know if it's at the bottom right now, right? I mean, if I have to go in, I need to somehow hedge, right? So to see if I go in, put in extra money, what if it goes down, more? I mean, there's the stuff that you shared, it makes sense. But then what if there is a way to hedge it? Like, you seem to have like Sophie's choice right now. Either you sit out and if you're down like 20%, 10%, whatever the case may be, just sit there and keep taking the down movement. Or you take out the money and you say, okay, I don't want to take any more down movement. Or you miss the up movement, which usually follows based on the stuff that you shared and what I've been seeing. So it's not a very good choice. It's like choosing between your two kids. I mean,
No, okay. So
it's
now I
already
get the
down
question.
10%. I put more money in, then I'm down like 15 now because I put more money in. And so the better way to do it seems like is some way of nuancing it, if you will. It seems too black and white.
Yeah.
And so
No,
now
I
if
get it.
everybody else does options, then maybe that's what I should do or think about at least. So I think it's sometimes when the bulb goes off, which is what is happening with me right now. I'm thinking, well, I should do this now. But that's what I'm thinking. So I don't have anything in mind. I just have the fact that what I'm doing right now is not the right option, right way to deal with it.
Okay, so no, I get your point. So let me tell you, this is exactly maybe okay. This is a great actually topic. We should consider, doing a session. So, like for example, today, if you think you're already invested, you want to, we call it like allocation using options. Can you increase your leverage? Can you increase your without increasing the cash into the market? Can you take a better position if you believe the your odds are better for investing at this time? Or you want to hedge it by saying that, can I hedge it if it goes down? All these things are available in options, and they are very simple. They are not very complicated. Like, for example, writing a out of money covered call means, again, just note it down, do a chat GPT or do a simple search. You will get videos on how to do that, right? Means this is very easy ways where you can generate extra, lower your break-even point, or you can reduce your, or you can basically reduce your risk, and you can generate higher returns and take advantage of a favorable situation in the market. And most importantly, uncertainty means there is higher volatility and there's even more money to be made using options. And when I say, again, just be careful, you're not speculating and hoping, right? Options, when used for a purpose, for example, you are saying, you had a very good question. Uh, and I think what you are asking is, what if I don't know if this is the bottom? Means, I gave you an example. Like, we just did a trade last 2-3 weeks. We were early. We sold a QQQ put. We rolled it down. We picked some more dollars from the market, And we are actually continuously, even though we are not yet there, we could not find the bottom, we are still able to roll it. We have done it many times. We do it all the time. Like, I think you're the subscriber, you've seen it, maybe you did not do the trades. But basically what we do is we keep rolling, reducing our break-even point. When it means, yes, timing is difficult. It means you may be interested in a stock. You can never know the bottom. It means it's always in hindsight. The bottoms are always in hindsight. So you can build strategies to reduce your price. So you may still end up not getting the best price, but you can definitely, means what I can guarantee is options can give you better than today's price. If you made up your mind that today you want to buy a stock, we can like very easily build strategies to buy it at less than today's price. Whether that is the bottom, that is, of course, nobody knows.
Hmm.
So,
Yeah.
and similarly,
See,
you can hedge
some
it.
more interest.
Yeah.
If
Go
there's
ahead.
enough interest, maybe we can spend more time, maybe every week, a little bit of time, or well, I'll do my own reading.
Sure. No, I think, as I said, like I'm available to, means I'm not the best in the basic coaching. We can do a scenario analysis because I'm sure there are better YouTube videos for, what is a put, what is a call spread, what is this. I mean, I cannot add value in those. We can do any kind of a strategy discussion on, what if you do this. Means the best thing where I can add value is because of the experience of working with options is you enter into a trade, how to adjust a trade, how do you manage that? If things go in favor of you, against you, we can do those kind of discussions, always available to discuss those. And we can define a topic. I think we are already getting a very good feedback for these calls on what to discuss. So we can do that, or I think there was as I said, I think options can get a little tricky on a call. Maybe we can even do a in-person kind of a options workshop if that helps. I think the idea here is to just get the feedback on what people are looking to make the best of in the current market, right? Means we don't want a situation where people, I don't want anybody to play with options without knowing what they're doing, because yes, they also add up leverage into your portfolio. So be careful. So don't do with half knowledge. Means just because I'm promoting it a lot here. So let me be also a disclaimer that this also adds risk to your portfolio, right? Means you're basically increasing the leverage when you're using options, because when you enable options, you are allowing margin, you're allowing, use of those tools which can give you those corner cases which you may not understand. So definitely spend a little more time. Do it with, by discussing it, making sure you're getting it reviewed if you're new to it. And this is what we do, right? Means this is why we did this Proflex All Access. We have been talking about this. We share, and if you are part of that, we can discuss those trades and how to adjust. And we are always open on the Discord channel there to talk about those. So, but I think, yeah, means in terms of right now, means it may be very difficult to cover it in a simple session like Zoom here. Means it may need a little more than an hour also to go through all these corner cases. So I think we're at the top of the hour. I'll take a couple of quick questions. Yeah, I think I did get this that question around recommending the options trading videos. I think we have been sharing those. Let's put this in WhatsApp so that it's a better record. Everybody can get it. We will get it out there. I think a lot of people are saying that it's a good idea. I see everybody is kind of agreeing. I see 3 or 4 comments now in the chat, in direct messages, that people are interested in the option session. So I think let's discuss this further in the WhatsApp of how to get maybe a best place to get this workshop going. There's another question of, I think there's a comment rather, that price of BTC versus number of BTC per kilogram of gold over time. There's a chart. Yes, go ahead.
So if I may elaborate on that. So that is basically a chart I've put in. On the upper side, you will see the price of Bitcoin on a log scale. And on the bottom chart, you have got the number of Bitcoins you could get in gold over time. So, I mean, there's a bit of curve fitting in there. There's some curve fitting in there, but it seems that the variation in price between Bitcoin and gold is reducing over time. So there seems to be a greater correlation between Bitcoin and gold. Any thoughts on that?
I think it's a matter of how the market cap is becoming big enough now that everything will look correlated in a logarithmic chart, because earlier you were talking about Bitcoin not being in trillions of dollars. Now we are talking about trillions of dollars. So now the scale is kind of becoming shorter and shorter. So you cannot have 1000x or 2000x returns from here, which Bitcoin was giving earlier. So I would say this probably is not the best way to look at the correlation. This might be a little more, means it might give you a little different. My quick take, of course, I need to spend a little more time thinking about it, but my quick take on this is just showing you that Bitcoin is catching up on gold, and now it's it's a certain percentage of gold market cap. That's what it's showing.
Yeah. So Raman, can I ask my questions? I finally got onto the Zoom
Sure.
versus
Go ahead.
dial-in. I'm out of state for work. So with respect to this announcement, right? So the announcement was to form the group to decide whether strategic reserve makes sense, or the announcement by Trump was final. Strategic reserve is happening. I thought it was more about it's not formed yet, but it's not confirmed that there'll be a strategic reserve, but they have to investigate it.
Okay, so they have created a strategic reserve of existing Bitcoin that has been executive order. It is already signed. It is created, and it is part of the treasury assets now.
Okay.
So that is already done, and I don't think there is any more action remaining on creation of strategic reserve.
Okay.
The whole committee which is formed is for bigger purpose of for crypto. And also they are considering how to add more Bitcoin to strategic reserve. The executive order said that you cannot use taxpayer dollars to buy Bitcoin.
San Francisco, I'll call you just to get some information.
Can you be
Give me
quiet,
2
please, if you are okay. All right, so let's. I think we have talked about this before. So let's basically the Bitcoin is mostly like strategic reserve is already formed. Just to confirm to your question, I think we are already running on top of the hour. So I think let's conclude here today. Thanks everybody for joining. It was, I think, always as usual. We are getting pretty good participation, good questions. So let's continue on the WhatsApp, and I think all these great ideas. I think I do see there is a lot of interest in the options. So we can maybe decide as a community on what's the best next steps to get that. But again, as I said, like my summary for today is that we have a pretty good opportunity here. So don't miss out on this. Don't be, impacted by the fear factor of the news cycle. This is what we always say in Proflex. Like, my goal is always to talk about looking at the opportunity. Means when you are investing in stocks, you're investing in, you have already taken risk when you went and decided to invest in stocks. So don't be, take a step back because it's risky. Look at whether it's a better opportunity, better odds when the sentiment is down. That is I would say, summary of today. And that's what I would like people to focus on. Thanks again, and have a great weekend.